Hi, this is Simon with Trade and Perform Coaching, doing the trade review for January 24th, 2014. What a spectacular trading day. I wish every single day was like this. Would simply be would be great, both up and down. Take a picture of this. This is wonderful. It doesn't come too often. So let me jump right into it. A lot of this scenario, I pretty much laid out this exact scenario in the trade review, market preview in the morning, and that video can be found right below this one. I encourage everyone to look at it, go over it again, take a picture of this day. They're they don't happen very often, but when they do, they can be great paydays. Looking at the day, again, you got to realize I'm a contra trader. It's going to be rare that I actually catch the trend. I try if I get the opportunity, and I took actually a shot on NQ on the bounce to the downside, and it bounced and stopped me out. That happens, no big deal. I took a shot at it, didn't work out. So, but there were a lot of other really great trades, and I'm going to go over them right now with y'all. So let's kind of deconstruct what we were looking for in the open. The first thing I mentioned was two things. First of all, we had to get back above Thursday's low to squeeze back above. When I was doing the trade review, we weren't certain whether we could open up into Thursday's lows. And then the question was going to be from there, which way would it go, right? I laid out a couple scenarios where we opened up and immediately came up and drove through Thursday's low higher, or we could come up and then reject lower, right? As it turns out, well, the second scenario was that we would simply open drive lower, and if the first three bars of the day were red and each one progressively traded below the prior bar's low and failed to trade above the first bar's high, right? Highly indicative of trend days down, right? Or at least range extensions lower, or if it were the opposite of this picture, meaning there were three green bars up, range extension up or trend day up, right? So we had our first clue in the first 15 minutes, right? Now, we did get a zero tick reading, but it was a pretty hard read to actually pull the short off here. And then the other thing that we were looking for through the course of the day was from that 9:30 to 10:30 framework, right, was that I generally look for points of reversals in that time frame of the day. When I get a trend day down, I really don't want to look for a reversal before that point necessarily, right? I would consider them more aggressive trades. So if we look here, we had our first indication, unable to get back to even test Thursday's low, 3 bars down off of the open. We know that we have high odds of a trend day. Even with that, right, what would have prevented us from losing money in this first section? Appropriate rotation down. This is approximately 1811, maybe 1812. I don't have it stretched out quite enough to be able to see that. Let's find out here. We'll go over the chart point by point since we have so much to cover. And as we can see, 1812, right, 6-point rotation, which is what I discussed in the pre-market. Minimum of a 6-point rotation from 1812 brings us to 1806, right at the top of this zone. And as you can see, from 1806, we got a rotation up, back up, and I actually missed this trade, right? Almost all the way to the highs. I just kind of went over off the open, and I wasn't prepared quickly enough to take this trade. No big deal, right? Doesn't mean I chase, I don't freak out, I just relaxed. So we had a couple things going off the open. Trend day down. We got the bounce off of the first 6-point rotation, which was what we were looking for. Next, where do we move to next? Let's look at NQ and how it was trading out of the gate. Okay, the first thing I listed, pre-market, NQ had been holding above prior day's lows and much stronger than ES was prior to the open. I said it needed to hold above. So if we look at NQ, they tried to hold it up on the first 2 bars, and then we got the 3 bars driven down. We traded below Thursday's low, and we came back for a backside test, Thursday's low, unable to penetrate back above, if you can see that. And what that ended up generating, give me just 1 second here. What that ended up generating was an excellent trade location to the downside, which I actually did take. I'm not sure if I put that out on the general Twitter stream. I did put it on my private Twitter feed for my coaching clients. And I ended up getting a nice scale for 5 points, and then I got stopped back out when it traded back up inside of it. This little sequence right here, by the way, this made perfect sense, right? We came right out of the support zone, traded up. It was a beautiful trade out of the gate. It was aggressive prior to 9:30, right? And you have to decide in your trade plan whether you're going to take those aggressive days when we've identified potential trend day down, but it certainly worked nicely. But I'm going to show you this sequence and where traders really get nailed here. So if you look in this 5-minute area, of course afterwards it looks nice and clean, but this is hard. If you think you've identified a trend day down and you're not disciplined and you chase down here, you got crunched. This is 74 all the way up to 86, 12-point rotation. That's really tough. That's $240 a contract in this rotation if you chased all the way down to the bottom. Again, I never ever in my trade plan, I do not chase. Only exception is the zero tick trade that I have. I'm not even going to go over that right now. But every other trade has to, and it's a rare trade, that zero tick. Every other trade has to come to a rotation. All anyone had to do if they wanted to get NQ short was wait for a beautiful rotation here, leave an appropriate stop in this zone, and you got paid huge. Okay, but even with that, you'll notice the rips up and down. This is a rotation from 86, right, all the way down to almost 76, 10 points, and then a snapback all the way up. Okay, so that's just extremely hard to trade. I don't have a solution for that unless your trade plan simply calls for a stop above the swing high. That's the only thing you really could have done to be and stick with the trade, unless you just were certain we were going to tank. I have no idea how you would have known that at this particular juncture. We were already down a lot to start with. Going back and looking at that same time frame on ES, you can see again these whips were vicious, and if you look, they try to trap. Another area that made this pretty hard was that they try to set up a trap trade above Globex lows here, and it would not have been impossible to envision a trap back above into the Globex lows, a test back, one more backside test, and then to think we were going to get a push up. So this was not the easiest area to take a trade. As it turns out, the trend day down, that was a pretty vicious snapback, although, right, it did not clear the first bar's high. So critical, again, if you chased in this area, either way, you chased up or you chased down without waiting for a trade location. Again, trap trade is a very aggressive trade. I generally don't talk a lot about it because it is aggressive and it's harder to manage, right? You got smoked either way. The easiest way was simply to wait for the rotations. 1812 down to 1806, 6-point rotation, first time into the zone, you got paid. Congratulations. And that's the beauty of having not only the zones, the levels, which help you, but you also need the trade plan to accompany those zones or those trade locations, no matter who you're following, so that you can stay in the trades. Let's keep following through this location. Clearly at this point, we're into the second time into the zone here. It's still garnered a respectable trade back to the upside. I did not take this. At this point, I just wasn't interested in this whipsaw. However, when we got this bar right here and we pushed to new lows, this is now first time, second time, third time into the zone. I don't trade third moves into the zone, and this is the reason why. You got kiboshed, right? And you were taking your stop instead of getting great trade location. And if you look here, and I tweeted this live, I took the trade. I believe I took 101.75, and I just barely, by the hair of my chin, missed my exit here. It went ask 2 points. If you look here, it went ask 2 points from 101 3/4. It went ask 7/8 from the very top of the zone. Okay, so two things here, and I live tweeted this Again, if you took anywhere from the anywhere really from the top to the back, you easily got your 2 points, and you should have scaled if you're trading. If you were trading my methodology, right? If you look, we had the proper entry size. If you look from the swing high, that was all the way up in terms of this rotation, all the way up from 1811 all the way down to 1802. That's an 8-point rotation, and then finally the back of the zone was a 10-point rotation down, and it did garner a trade. If you can't get your fill at the top of this trade zone right here, you've got to improvise. This is a fast market, right? And I called this out. I said, if you can't get your trade location, if you can't get your 2 points, take half the trade off and then make a decision. Either move your trade entry to break even, which for me would have been 101.75, or move it back to net break even, which what I ended up doing was taking 1803 when I couldn't get the fill. I took 1803, and then I ended up taking moving my stop on the second half of the trade to 1801. I netted out break even here. This move here is the second move into the zone, and again, sometimes second moves are pretty damn hard, and it's why I focus the majority of the time on talking about the first move into the zone under this trading methodology. Second trades require more skill, and they require more evidence to take the second trade, and I don't even touch third trades. If you'll notice, and I called this out live as well, 1796, I believe I took 1796, and I took 1795, 75, right at the top of the zone, long. Again, my stop is right behind here. You can't trade with fear, right? The stop is sitting right behind this zone. This is what prevents you. If you think these big red candles are scary, you're wrong. They're opportunities, guys. Big red candles are opportunities. People are just being stupid with their trading, right? If you get a big red candle first time into the zone, it is almost always a great trading opportunity. It certainly is for me. If you'll notice here, I took a long. I had really large size on this trade. I got a rotation. I took my 2 points right here. I took another scale right up here at 101.75. It's just an accident that I caught. It was back of the zone. Let's call it lucky, right? So this was my best scale. And then I simply moved my stop at this point to break even. And when I took my first 2 points, I moved it up to net break even. And then when I took this trade right here, I essentially had almost 6 points on this trade. And I moved the up to true break even, meaning where I entered. And I got stopped out, right? But look how long I gave this trade to work. From 10:30, essentially when I entered, all the way over to, I was able to stick it out all the way over to 1 o'clock. We came back from lunch, and we got an additional sell program. I got my profit in my pocket here. I also took a beautiful trade on NQ where my best scale on NQ was 16 points. 16 points is a lot of money, guys. That's $320 a contract. So I don't know where else you can find that kind of money, but that's pretty good smack to me, at least. I'll take it every time. Again, the key was first time into the zone. First time into the zone. What saved my bacon from getting crushed in the afternoon? A couple things. First of all, excuse me, I apologize. I wish I did not or had not gone off. Let's, yes, goodbye, Jane. The first thing that saved my bacon. First time in the zone, second time in the zone. Not a problem for me, right? Again, I'm not taking a look at the trend, and I said going into the last hour, contra trades, I warned in the morning, can get directional. Either way, it's not the hour where I like to trade, and I just assume leave it alone. Furthermore, with the downside that we had Friday afternoon, we were wide open for panic. But even with that, if you look, first of all, the rotation back up into the zone wasn't large enough. Had we come down here and then rotated up with a nice 6-point rotation first time into the zone, that's an acceptable trade. By the way, I didn't take it. I wasn't here. And the only issue I had with taking this short in this zone, clearly it worked. What I was playing for here was essentially a trap trade where they I did figure that we would shake and bake below the 1800 if we got down here. And I was hoping that we would trap traders below and push back up to either 1804, 1806, and then eventually 1810 level. That scenario didn't play out. That was just a strategic decision that I made. That's what I was playing for. I was willing to leave size on, and also if you look at time of day, I was already approaching this 11 o'clock hour. Most days, if you'll go back, right, the majority of the patterns we follow look like this: down, then back up. Most days do not close at the lows of the day. So if I'm going to make a bet, I'm going to make a bet that works for me on the majority of the days and not worry about the minority of the days. Most people will lose money, right? If you bet on this scenario, this downside scenario, 100 times on every trading day, 100 trading days in a row, you would lose your ass, even in bear markets. The majority of the time, you're going to lose 95 out of 100 betting on this close of the low of the day. Furthermore, what this shows, and importantly, is, right, good trade management. It doesn't matter if the market is shooting straight down, you're still going to get opportunities to the long side. You don't have to be on the same side of the trend, right, to get good trades. Secondly, all you need is 1 or 2 good trades in a day, and all we're trying to accomplish is 2 points. On my NQ trades, all I'm trying to get is 4 or 5 points. If I get 10 points, or God, 16, that's a home run, hit it out of the park kind of day for me, right? I get 6 points on ES. I'm ecstatic. I am shooting for 2 points per trade. That is equivalent to $100 a contract, and I can make all the money I have ever needed, ever will need, or ever want out of that trade, right? Everything else is simply icing on the cake. So to go over the end of this point, right? End of day is extremely dangerous if you're taking contra trades here. But even with that, the zones did hold, right? Came in, rotated up for your 2 points, right? 1788, we rotated all the way up to 1791. It gave you your 2 points. It's just not my flavor. Why? It's not worth taking the risk that we get flushed like this. The other thing that was interesting in the afternoon, remember, after 10:30 we get a lot less participation. Europe is closed at this point. So it takes a lot less volume to make these drives occur. Also, from a psychological standpoint, right, when you're trading in the last hour, trying to capture a contra trade, can it work? Yes. But look at it from the position you're placing yourself in, right? The day's ending, all the volume's tying down. 70% or 80% of all algos that fire through the course of the day fire in the last hour. So you are dancing with these computers, and the computers are designed to make it tough and make it look ugly. They want to shake as many people as possible. Why you'd want to dance with those guys? Beyond me, right? Not my flavor. I don't like trying to get lucky, and I don't like gambling, per se, true gambling, where I'm just throwing dice in the wind and trying to win. I prefer, right, to get where I have plenty of time to let the trade work. And also, the other thing that you're doing by trading this hour, you're not the only one that has a time constraint. More and more people are going to have to make a decision by the close of market, whether they're going to counter trade and buy it, or whether they're just going to panic and sell it. Either way, everyone's getting backed into that same corner where you can have a potential for a rush for the exits or a rush for the entries. Either way, you're putting yourself at great risk. The majority of retail traders make the mistake that because they're trading small size, or they have smaller size accounts, they have to grab a larger trade. Most institutional traders look at it just the opposite. They look at it as, I can take my highest odds trades. I only need 1 or 2 points to make my money, and that's all I care about. Guys make millions of dollars a year doing this. And in the meantime, small retailer traders, because they have no plan for increasing trade size, they have no plan for consistency, for the most part, they have no trading plan at all. They have nothing written down, and they have no way to counter check if they're actually doing what they said they were going to do. And so what they end up with is equity cycles that usually look something like this. They usually start off down, actually, and then they do this all the way down. That's one cycle until they get to bust, where they've just gotten sick of it. The other way they do is they get into a particular market, like we just had, where they just have consistent runs. They buy every single dip. Their equity curves goes like this, and then they get 2 or 3 days like we just had. They're used to buying the dip, and they get bone crushed in their equity, and they give back everything that they made, okay? And then they follow these huge volatile cycles. If they're lucky, right, they end up break even over the course of months or years, right? And if they're the average, it actually looks like this. Until you're fed up, you go back and take a real job, and you're pissed because you're working for the man for the rest of your life. No one likes to do that. I don't care how much you're making. I've heard from all walks of life, all amounts of money makers, from guys that make $50,000 a year to guys that make $1 million a year. And if they're working in a corporate environment, they are tired of having to answer to someone else. So don't let that be you. That can be solved, right? It takes time, it takes a plan, it takes an edge. And it takes the discipline to follow that edge, and usually a little bit of help along the way. So I can't stress enough to you how much a trading coach can help. Certainly, if it's not me, someone else. I use a trading coach myself to help me stay in line. And the reason why is this business is isolated, right? No one knows that you're taking losses. Secondly, everyone on Stock Twits and Twitter. Okay, so if 70% of retail trading accounts blow up, someone on Twitter and someone on Stock Twits is lying, right? And then the third part of that is when you put your pressure on yourself that I have to make money today to trade, right? If I have to get my trade today, you're putting yourself in a position where you're in a no-win situation. You are only going to look at situations that you think confirm your bias. Your bias in that case is I have to find an opportunity, and you see things that don't exist, or you take trades that have low odds of working out. And then the worst of all possible worlds, right? Someone takes a flyer that isn't in their trade setup, and they make a killing, right? They capture this whole move. They are partying this weekend. They get this 1794 down to 1781. They feel like kings. Let me tell you, they will pay for this trade. Highly likely, they'll pay for this trade for the rest of their trading careers, because what they've experienced is called random reward. They had no plan to take this trade. They had no way of knowing that we were going to tank. At the end of the day, we're already down over 20 ES points at this point on the day. And they're taking a short here. If you go back and look at your charts, what happens the majority of days you take 20 points down on an ES trade is you get crushed. That's usually the result, right? So this guy's going to try and spend the rest of his trading career replicating this trade and giving back every single penny he made as he takes stop after stop, because this is a very rare event. Home runs are hard to hit. Singles, however, win the day, right? In that movie, if you haven't seen it, Moneyball, singles win championships. Home runs are for show. So if you get a home run every once in a while, I did. Yesterday I got a home run. In the last 2 days would qualify as a home run for me. But if you actually want to do this for a living, you have to focus on the singles. And if you get a home run, be pleasantly surprised. Anyways, my name is Simon with Trade and Perform Coaching. I will do the market preview tomorrow morning. I'm going to get my charts out actually prior to tonight's open. I'll post some levels. Those levels will probably change in the morning. But and no, I will not be trading this evening unless we just have a massive gap down out of the gate. And then I will see if I can get positioned with the proper risk overnight. But I do not like trading 24 hours a day, and I certainly don't want to try and manage it overnight. I like to get a good night's sleep, and there'll be plenty of money and plenty of opportunity for me tomorrow. So again, my name is Simon. You can reach me at tradeandperform@gmail.com. I hope this was helpful. I love the feedback. Feel free to give me feedback via Twitter, Stock Twits. It can be negative feedback, positive feedback. I don't care. My purpose here is to help people make money. That's the only reason I'm doing this. And hopefully, I know that I've moved multiple traders to profitability and consistency. And hopefully, no matter who you're following or what you're doing, you are having the same experience. Your dream of being able to be a professional trader can be realized. You just need a good roadmap to get there. Have a great day, guys. Enjoy your weekend.